Speakers on stage, ladies and gentlemen, a huge round of applause as I invite on stage the founder of CRED, Mr. Kunal Shah, as well as the Chief Executive Officer of NITI Aayog, we have Mr. BVR Subrahmanyam joining us on stage. A huge, huge round of applause, ladies and gentlemen. And thank you so much for both of you joining us this morning here at GFF 2025.
Thank you so much for being here, sir. I thought maybe the audience is, I would say, somewhat familiar with fintech, but what they would probably benefit from is get the government's vision on Viksit Bharat as a goal and a mission. And what does it mean? What does it encompass? What are the barriers? What are the enablers? Would love to kind of get a perspective. And then maybe we can come to the role of financial services and fintech as a path to achieve that goal.
So, as you all know, we are the fourth largest economy today. And the Prime Minister has set a goal for India to become a developed country by 2047. That means India will have a per capita GDP of about $18,000 and a total GDP of about $30 trillion. That's larger than the United States today, just to give you an idea of how big $30 trillion is. It's very difficult to imagine these numbers. Why are these goals being set? The goals are being set because I think the problems of the past have largely been resolved. The country was all about roti, kapda, makan, hunger, famine, poverty, ignorance, disease, illiteracy. These are the problems of India for the last 75 years. Those problems have largely been resolved. So we are at that point where we can take a great leap into the future. Countries which are at this point have had accelerated rapid growth. And that's been true of history across countries. So having identified that spot, these goals have been set. So what does it mean that when we become a developed economy? We become a country which not only is large in terms of GDP, we also have all the attributes of a developed economy. And I think that's the direction which the government is moving. And the government has very concrete plans, be it for individuals, be it education, healthcare, old age care, women, children, be it the economy, which is industry, finance, agriculture, the service sector, tourism, energy, green, all that stuff. The plans are there. And science and technology, because the future is going to be driven by tech. So it is current technologies, frontier technologies, R&D, startup, this whole ecosystem. And of course, to support all that, a very strong governance system and a strong security system to make India take its rightful place in the world. So this is the larger concept or the larger picture within which the country is actually hoping to go ahead. And I think the Prime Minister has been alluding to it from time to time from various forums like this. But what's the importance of finance in this? Finance is the oil, which greases the wheels. Without finance, the world doesn't move. With dhana moolam idan jagat. So without dhana, the world doesn't move. Let's be very clear. And if you look at money, what is the purpose of money? If pure finance, 101 class economics will say, money is either a store of value or a medium of exchange. Correct. And a medium of exchange means it's amenable to technology. It's amenable to automation. Anything that can be exchanged can be done in different ways. Instead of physical, it could be electronic, it could be other ways, it could be just, virtual. So I think finance for a country with a $30 trillion economy, which is going to be technologically advanced, it will be very large. The financial sector in India is going to be very, very large. 2, what does it mean for organizations and firms? Firms and organizations in India will be equally large. Banking firms, financial firms. I have said before somewhere, we'll have our own JP Morgans, we will have our own Citibanks, that will be there. But simultaneously, that is if we think the way we are thinking today. 30, 25 years from now, do we still need organizations like that? Or there'll be newer types of organizations handling the financial function. And that's where technology and finance merge. And that's where you have this word fintech. And I think there you have a huge advantage. So the government actually is betting on fintech to handle A, India's finance needs or financing needs, and B, also make India a leader. Why make it a leader? The impact of finance has traditionally been a very slow-moving sector globally. You go anywhere, the banks in London, the banks in New York, What was there 1900 largely are there in 2000 also. Very, very slow moving. But if you look at the last 10, 15 years, there's been a rapid turnover, and that's because of tech. When tech impacts any sector, you have a discontinuity. And when you have a discontinuity, you have opportunity. And I think India is seeing that opportunity, exploit this discontinuity, and become a leader in fintech globally. And what are the biggest advantages? We have a large pool of talent, of people, both in tech as well as finance. And two, we have scale. Where in the world will you get a market which is 1.5 billion strong in terms of people? And thirdly, a huge penetration of the digital economy into our ecosystem. I think all this put together, I think gives India a phenomenal opportunity to be a leader in fintech. And the journey has been fabulous. It's not that it's something we are pulling a dream out of our hat. If you look at what we have achieved, I mean, the digitalization story of India, what I would call the India model, it is fintech at scale. I think that's the Indian model. And nobody else has been able to do it. You began with the Jam Trinity, Jandhan, Aadhaar, and mobile, and look at the scale of that. 500 million Jandhan account. You take Aadhaar, 1.3 billion Aadhaar numbers, and then what was that followed by? That was followed by UPI, and UPI is what, about 20 billion transactions a year or something like that. I mean, the numbers are mind-boggling. Then they keep increasing every month, and now that's been followed up by ONDC. And the newer and newer innovations coming up. You've got the account aggregator framework. So India has already been pushing the envelope. And given this, I think we are at a stage, where we can leverage fintech for making India a developed country and also become a global leader in fintech while simultaneously fulfilling our own needs of finance.
That's great, sir. Sir, you talked about a role of tech and financial services to kind of accelerate and make things more efficient. Would like to get your view on how is the government thinking about credit and how will tech be leveraged? We've already seen some work being done on ULI as a one initiative being taken, but what is the bigger vision behind credit? Because today, the truth remains that the credit penetration is still very nascent at this point of time for the country, and we need to get a lot more people included in the credit ecosystem. Would love to get your perspective.
Yeah. So what is old-fashioned credit about? You go to a bank or a money lender, you have collateral and you get a loan. Okay. Nobody looked at what your capability of repaying a loan was. Fundamentally, you still depended a lot on collateral. Thanks to digitalization, the penetration of the digital economy and digital finance in particular, all our transactions are leaving traces. So people know our credit behavior, our money behavior, our income behavior, the patterns are very well known. So I think India was one of the leaders in coming out with the account aggregator framework. What was it all about? It was actually about building on what we have done in JAM to take it to the next level. So where the Jandan Aadhaar and UPI thing was all about transactions. Moving from that to use transaction data to know people's case histories of credit, and enable people of cash, and then enable them to get credit. And I think that has led to a spurt. And there are large startups in Bangalore, in Mumbai, probably attending this festival, where they are actually making their credit decisions based on individuals' cash flows rather than their financial or their asset base that is there. And this is very, very fundamental. India's credit needs are humongous. I am not even going to go into the numbers. They are going to be in trillions of dollars, because for a $30 trillion economy, you can see what the credit needs are. We have a country where everybody has a bank account. However, the bank accounts are largely being used for one-way payments, either salaries or pensions or government subsidies. They're flowing into those accounts. Have they become avenues for saving, avenues for investment, avenues for taking credit? Not yet certain. I think the credit gaps are large, particularly for 3-4 categories. Women. I think women taking credit is still very low. 2, MSMEs. I think we have a 20-25 lakh crore gap in credit for MSMEs. Their dependence on the informal sector is still very large. The third is youth. How many students actually are able to get loans to go to college? Again, a large. So you have large underserved segments where credit is difficult through traditional metrics. And fintech by actually leveraging access to data on people's financial, what should I say, financial picture, are able to actually give credit based on other metrics, and maybe in smaller doses, going to larger doses. And we have good examples. You have got the Mudra scheme, where people are given loans, credit, and based on credit history, their loan amounts are being enhanced. Same thing is being done in PM Vishwakarma, which is for artisans, people who do handicrafts and carpenters and dhobis and nais. So it is there. And we've got actually now tons of people getting credit histories based on that. It's just that the pool is still too small and we need to expand it massively.
Perfect. Sir, I'm going to double click on one topic about, you talk about women's role in credit, but I think women's role in labor participation is going to be a big topic. You've discussed that in the past in many forums. For the Viksit Bharat vision, I think that's going to be one of the key factors. Would like to get your perspectives on how that trend is changing and how do you see this happening in the next 5-10 years?
So last 10 years or so, women's participation has gone up about 8-10%. But let me be very honest. Women's participation in the labor force in India is still not what it should be. I mean, that's half the population, right? You can't walk on one leg. Same way, economy can't walk on only half the population. You have to have women in equal numbers in the active workforce. I mean, there are studies which show that a 10% increase in women's labor force participation rate adds 1.5% to GDP growth rate. So if India's women's labor force participation rate, which is in the range of 35-40%, goes to the range of 45-50%, you'll be growing comfortably at 8%. Oh, wow. And that's the growth you want. Actually, unlocking India's growth miracle, one of the paths to that is just unlocking women's participation. I think that's a very, very easy solution. Now, what do women need? And I think tech will play a role. I won't reduce it to just fintech. Women have peculiar needs. They need far more flexible working hours. And I think that's very, very important because they have other responsibilities. A father can never replace a mother fully. So there are one set of responsibilities. The second set of things is women need safety. They also need assistance in terms of creches, childcare facilities, etc. Now, tech can play a role in multiple ways. Number one, they can get actually access to platforms which can provide flexible working approaches. I think the gig economy does a lot of that, and I know all of you know companies which actually engage women through the gig economy, gig platforms to do that. I think that's one. The second, NITI itself runs a women's entrepreneurship platform, and we did a survey. What do women need the most? Number one, credit. Women find it far more difficult to get credit than men. For a very simple reason, most assets are in men's name. Two, most transactions happen in men's name. So the women actually don't have track record and credit histories. So Jandan did a great thing. 60-70% of accounts were in women's name. But I think we need to build that up more, number one. The second thing for women, of course, is safety. Provide safe transport. You will see that wherever there is a sense of safety, women's participation in the labor force goes up. Where do women work night shifts? Wherever you have an Apple factory in India today, you can figure out women feel safe there. Most people working in those factories are women, by the way. And the last but not the least is providing mentorship. Women need mentorship. Men get mentored by the other men. Women don't know whom to ask when they're in doubt. How do I file my tax return? How do I get a GST number? What do I do? How do I handle this particular problem? I think mentorship is missing in the women's space. Otherwise, they're fabulous entrepreneurs. They're the people, they're the self-help group movement in India. It's all being driven by women. And I think credit can play a major role in lifting these women. I think particularly the southern states, Andhra Pradesh, Karnataka, the SHG movement driven by credit. The SHGs originally were called thrift and credit groups. They later on were called self-help groups. So Thrift Credit Group, TCG, was the original name. They joined together to save money to fund each other's small businesses. Could be a hawker, a street seller, or whatever. I think if we do that well, and that can be there. And I know a large number of finance companies, I don't know whether they are using, how much of tech they are using, actually cater to this segment. Some of them are mutated into small finance banks, but I think tech has a very large role because there are all such small ticket transactions. Typical banking systems can't serve them, it's too costly. Whereas tech-enabled finance can provide credit at low cost to to this group of people, and they're desperate, they're thirsty for it.
This is, sir, there is another wave that we have kind of seeing some early results of is the wave of AI. I would like to get your perspective from what do you think that companies or individuals who are in the financial services industry should think about, and what is government's view on how AI could be leveraged? And you were earlier mentioning about how you are seeing implementations in the global stage in a very different manner. Would love to kind of get your overall picture on AI.
Yeah. So, I mean, this is one of the most transformative changes that is hitting the world. It's hitting society, AI. And there's no denying that. It's a disruptor. And a disruptor on a scale which is pretty unprecedented. I don't think the worry is about jobs being lost. It's about jobs being replaced by new types of jobs. I think that's the larger thing. And what is AI going to do? AI is at a very low level, I'm not talking of an advanced level, is going to probably assist in existing functions. So it's going to be an efficiency enhancer. But the bigger thing, and I don't think that's even started in India, AI is going to help completely re-engineer processes. And I don't think we are even at the beginning of that journey. I don't think that realization has sunk in. We are looking at AI as a tool to make us better. You know, I want to write an essay, I want to write a letter, or I want to do a search somewhere, and AI will help us. So that's fine. That's one level kind of stuff, agentic AI or whatever you call it. But if you look at the full potential of AI, entire processes can be completely redesigned. You know, assessing a person's creditworthiness in your own sector, assessing the risk behavior of a particular process, managing risk, checking fraud. AI can actually do it in a way which is inconceivable. What would that do? A lot of tasks which are done today manually would get done through AI. And I won't say individual. See, there are three levels at which AI will change. AI will change the way some tasks are performed. AI will change how processes are performed in some areas. And in some places, AI will completely change the need for a process itself. So given it'll attack things at three levels. So improving the way a task is performed is an efficiency tool. But changing the way the process itself is performed is a job substitution game that is going to go on. And I think AI is going to affect that. In a limited context of fintechs, I think because India has got scale, India has got the technological capacity, and India has got the digital base, which is quite large enough. India should move very fast on AI, innovate, come up with new products, new processes, new ways of doing things to deliver a variety of services which the financial sector consumers need. What do they need? They need insurance, they need savings instruments, they need investment instruments, they need a whole host of products which are needed. I think AI can be a far efficient way of actually doing things, and it's time to start thinking of that. Now, what would it mean? And it would mean there will be a constant tussle, a friction between regulators and the fintech sector or the innovators. And this stress is built into the system. Regulators have to take care to see that there is no harm. And innovators have to keep generating value. So when you integrate AI, bring in new systems, new processes, new ways of doing things, new ways of delivering things, the current systems and the current checks and balances won't know how to handle that. Then how do you see that that innovation actually happens? How that it takes root? What we would need to do is we probably will need to create regulatory sandboxes. That is number one, to allow the experiment to be done. We have not been very great at that. I mean, let's be very honest. We need to do much, much more. Our regulators need to be nimble-footed. You know, create small areas or small pilots where you can test out some premise, allow innovators to get in, fight it out, come up with solutions, and then if that succeeds, you can allow them to scale. I think that's so from innovation to scale is a model which should be adopted by regulators. And how do you then measure the success of the innovation? A, if it's delivering superior outcomes in whichever metric, and two, how is it actually impacting your prudential norms, your safety norms? Once it passes those, you should allow that to scale. It would also require a change in the way regulators do regulation. I keep saying, in our tax system, for example, unrelated, but our entire tax system was designed for a pen and paper era. That's why you have forms, Saral 1, 2, 3, and this, that, etc. But when we say we actually make it electronic, we take that form and put it electronic. You still type it in and enter it, etc. When your entire financial transactions, the entire universe is electronic already, don't your taxation systems also need to change completely? You need to redesign them de novo, from bottom up. Already you know that when you go to your tax system, your AIS and TIS tells you much more about you than you knew, right? When you have all that, you actually can completely change your tax system is designed. Similarly, if you have got so much technology into your products, processes, the regulation also will have to take into account that and do it, which would lead to a higher order problem. The higher order problem is, do regulators have capacity in technology? Do they have capacities in managing technology? I think they also need to be upskilled. So I think that is one large area. One more change in regulation that may be needed to enable the potential of fintech to happen is moving away from institution-based regulation to actually activity-based regulation. Why do you regulate me as a bank? Why do you regulate me as a mutual fund distributor? Regulate me for the product or activity I am doing. So I could be the same institution. If this side I'm doing a banking product, regulate me as a banker and apply all your norms there. But on the other side, if I'm distributing a fund, regulate me as a distributor for that rather than as a banker, and allow me to do all that. Currently, because we regulate institutions, you don't allow A to do B, B to do C. Whereas if you actually regulate activities, you will have far more flexibility. It will suit the fintech world much more. And let me tell you, the government is quite alive to this. I think the finance ministry and the regulators are in deep conversation to see how this can happen. We should not come to a situation where regulation stymies innovation to a point that innovation happens elsewhere. Innovation has no boundaries. Either you're first off the block, but don't think nobody will be off the block. Somebody else will be off the block if you're not.
This is a good point. A connected point, sir. I've been involved with fintech ecosystem now over 16, 17 years, sir, and I've also been an active investor in fintechs. I've invested in maybe 60, 70 fintech companies myself and built 2 of them. And one of the things that I'm noticing is, sir, that the investor interest that was there 5, 7 years ago is not the same anymore. In my view, it is largely as we are progressing towards evolution of fintech. We had a stage where we had to grow fast. We had to kind of become more mature in how we are handling things. But sir, there is a structural challenge where you will see that today fintechs would be probably 5% of what the banking revenue in terms of scale is. In terms of profitability, probably much lower. Now, in terms of this structural thing, more and more capital will be needed for innovation, sir, because we need more risk appetite to back innovation, because not all innovation works out. You try it and sometimes it doesn't work out. How do you think that companies should think about it, investors should think about it, and does government have a view on this topic?
So this is nothing to do with fintech alone. I mean, this is about all innovation, all tech, even more so deep tech.
That's correct.
Okay. So let's be very clear. Innovation ecosystems and financing for innovation actually grows on its own path. Nobody starts off in any ecosystem by funding deep tech innovation. I mean, it's probably 10, 20 years after an innovation ecosystem develops, the financiers are there, innovators are there, the whole ecosystem is there, then deep tech innovation starts getting funded. Similarly, I think we probably had an early boom. And the early boom because was also there because probably global capital was cheap. Okay, before the interest rates started going up 3 years ago, we were pretty close to globally zero interest rates. So there was a lot of cash flowing around the world, which funded a lot of startups in India, around the world. Easy time, easy money. Those days are off. So the tightening is happening, no doubt about it. But then what happens is there will still be money there for good ideas, good opportunities, and I don't think that money has vanished. The second is, in any sector, finance just being one, you have some initial wins because there's some initial ideas which are going to be successful. And then you go to a level and then you plateau. Then you will have some more breakthrough ideas which will take you to a next level or a larger pool of people or whatever. And then again you will plateau. And then you will have another idea which will take you to the next level. So I think be it finance, be it any other area, this is it. What happens when you innovate, say, in finance? You'll probably serve easy markets first. And that's where the innovation happens. Finance, tech, merge. You get some products, you get some firms, you get funding, you succeed. But then you saturate. Then it's only cannibalization. A new fellow comes and competes with an old fellow. But there's another market waiting outside cities which is probably not tapped. So you move into that. That requires a new thinking, new types of working, new types of processes. When those products come, you'll suddenly see another boom. Okay, I'll give you. We all use washing soap, right? People thought surf served the whole country till Nirma came along. And mind you, Nirma didn't cannibalize surf. It actually expanded the market. It took the market to some other areas which was not being served by surf, but in totality the market expanded, The same with Ghadi detergent, You are at that moment in fintech. We are probably in fintech struggling with the same pool of customers. Maybe the customer base is large. It's 100 million, 200 million. It's more than the population of countries. But if a country with 1.4 billion, there's still 1 billion people outside who are not touched by fintech. And growing that is going to be new opportunity, but also new challenges. You need to come out with products, firms, processes to handle that. That little, person sitting in some remote corner of Uttar Pradesh or Himachal Pradesh who has a financial need. What is the product or what is the service which will fit his or her needs? Has to be thought through, a mechanism developed to deliver that. I think there are large parts where this innovation needs to be done. And when that happens, you'll have more money coming in. So I don't see finance is the shortage. If you're chasing the same market with newer and newer products, maybe you're going to run into hassles. But the market in India, I think, is largely still untapped. In many ways, I think we are in Fintech 1.0 world, We are just trying to use technology linked to some forms of traditional finance and pushing the envelope, enabling efficiencies to reduce ticket sizes, generate large volumes, etc. We are not yet into integrating AI, moving into what I would call, Fintech 2.0.
Yeah, sir, actually, we should probably conclude with your vision on what do you see. Let's say we are sitting in 2025 and we are imagining 2047 as a developed nation. There'll be, every 5 years would require a landmark change in fintech to be kind of evolving. So let's talk about 1.0 has happened, it's played out, it's become a large ecosystem, has resulted in all these innovations. If you have to imagine 2.0, sir, what are the few things that you think about are going to be key enablers for that?
Okay, so today fintech is more about payments, maybe a bit more about credit. But the credit part is a small fraction of payment. Maybe you will actually have a fintech platform which meets all needs of an individual. So, a fintech money platform or a wealth platform which will include transactions, payments, savings, investment opportunities, insurance opportunities. The whole ecosystem is available to individuals through fintech. I think that's the higher order way of looking at it. And products which it hosts would cater to a large variety of customers, women, youth, MSMEs, people in remote areas, all kinds of stuff. The second is, fintech where AI is used to improve and customize any service it provides. I mean, with AI, you can provide far more customized credit. I mean, even using current technologies without AI, you would still have some buckets you will put people under. Whereas with AI, you can have highly individualized solutions that go to individuals, not just for credit, insurance, any product, mutual fund, pensions. I think Indians have just not been touched by pensions at all. The number not even, 10% of Indians have pensions. And if you look at our demography, today India has 13 crore people who are old, above 60. And by 2047, that number is going to be an absurd 35 crore people.
Oh, wow.
That's more than the population of US today, who are going to be above 60. Where are the pension products? People are not even thinking in those lines, actually. And of course, insurance, pension, the whole range of stuff. So that is one. AI-assisted, decision. The other is, today you're having a lot of state-led innovation happening in fintech. Maharashtra has a fintech hub. Telangana has set up something like that. Andhra is setting up something like that. I think I expect a far more dynamic ecosystem by 47, where the sandboxes are actually created at state levels. And they get freedom to innovate and permit new developments to happen. So then what happens is Bangalore becomes an innovation center, Bhubaneswar becomes an innovation center. That is one. Another area where I actually see, by 47, India would be a global leader in setting standards, across the world. What happens in India becomes the standard for the rest of the world, because again, by 2047, we would be larger than China by a comfortable 20 crores. By the end of the century, we will be twice the size of China, by the way. And the future is in our favor. It's a question of, are we going to do the right things? Are we going to use technology to leverage this opportunity and make our nation great?
Perfect. Sir, thank you so much for your time. Big round of applause for sir. And sir, we'll keep doing more work. The ecosystem is going to keep working, and hopefully we'll see you again next year.
Thank you.
Just come forward for the centered photo, please. Yes. Thank you so much, Mr. Kunal. Thank you so much, Mr. Subrahmanyam. Truly, I think that was a valuable conversation here at GFF 2025. Thank you. Thank you so much once again.